Friday, the relief rally closed at record highs. The S&P 500 finished at an all-time high, oil fell to its lowest since early March, and the whole tape exhaled on hopes of a deal to end the war. And then, at 21 minutes past 5, a genuinely new kind of risk arrived. The United States government reached into the artificial intelligence stack and switched a frontier model off. Citing national security, the government ordered Anthropic to suspend its two newest models, Fable 5 and Mythos 5, for every foreign national on Earth. The only way to comply was to disable them for everyone, worldwide, 3 days after launch. It is the first time the state has flipped a kill switch on a frontier model, and the relief rally everyone is chasing is still built on a deal that no one has signed, with a central bank weak landing on top of it. So the question changed. It is no longer just who builds the best model, it is who the state can switch off and who the state needs on. The edge is not the relief rally at record highs. It is the artificial intelligence the state needs on, sovereign, embedded, and already inside the government. The buyer, not the bounce. This is the asymmetric. This is the asymmetric, issue 15, the kill switch. Tech and crypto investing for thoughtful retail from an operator's lens. The relief rally closed at record highs, and then the state showed it has a kill switch on frontier artificial intelligence, moving the edge from the model layer the government can switch off to the artificial intelligence the government actively needs. Here's the one-line read. Risk closed at fresh highs on continued de-escalation. The S&P 500 a record 7431, the Nasdaq 25,889, the Dow 51,200. As an administration official, put the odds of a signed deal in the coming days near 80%, and oil fell to $84.88. But the deal is still unsigned. The vice president warned of, quote, a lot of fake information about the terms. Then, Friday evening, the government issued an export control directive ordering Anthropic to suspend all access to Fable 5 and Mythos 5 by any foreign national, forcing a worldwide shutdown 3 days after launch. It is the first time the state flipped a kill switch on a frontier model. The central bank week still lands. The Bank of Japan is about 97% priced to hike to 1%. Its highest since 1995, the same week as the new Federal Reserve chair's first meeting. The durable read, own the artificial intelligence the state needs on, not the model layer it can switch off. The same discipline labels run throughout. Confidence, high, medium, or low. Consensus versus variant, what the market believes and where we may differ. And on every call, what would change our mind. This is research, not advice. Part 1, the kill switch, the relief, the unsigned deal, and the variable nobody priced. The regime at a glance. The S&P 500 closed at a record 74.31. Oil fell 3.2% to $84.88, the lowest since March. Fable 5 and Mythos 5 switched off worldwide by a government export order. The Bank of Japan set to hike to 1% next week, its highest since 1995. Gold firmed near $4,190 even as the war premium faded. And Bitcoin holding its 200-week moving average, the line that has marked past cycle bottoms. The relief is priced on an unsigned deal, and the genuinely new variable is sovereign risk inside the artificial intelligence stack. Start with the new variable. The state reaches into the frontier artificial intelligence stack. At 21 minutes past 5 on Friday, the government, citing national security export control authorities, ordered Anthropic to suspend all access to Fable 5 and Mythos 5 by any foreign national, including its own foreign national employees. The only compliant path was to disable the models for every customer, worldwide, 3 days after launch. Strip the specifics. And the precedent is the story. The state has demonstrated in public that it can switch a frontier model off. Single vendor dependence on a frontier model is now a governance and continuity risk. Anthropic is complying, calls it a likely misunderstanding tied to an alleged jailbreak, and says it is working to restore access. The trade it reframes. The question is no longer only who builds the best model, it is who the state can switch off and who the state needs on. Then geopolitics and oil. The choke point keeps reopening, claimed, and the premium keeps bleeding. Crude fell 3.2% to $84.88, with Brent down to $87.33, the lowest since early March. An administration official put the odds of a signed deal in the coming days near 80%, with terms to reopen the Strait of Hormuz and dismantle Iran's nuclear program. But the deal is still unsigned. The vice president warned of a lot of fake information about the terms, stressing no cash is going to Iran. The market is pricing a deal it does not yet have. And oil is still about 20% above its pre-strike level, so the disinflation is real but partial. Then rates and the Federal Reserve. The new chair's first meeting is June 16th and 17th, with the funds rate held near 3.5%, about 97% priced. The expected signal is a shift from an easing bias toward neutral. The calculus is two-sided. A hawkish new chair reading May's hot 4.2% inflation against a fast oil decline that argues the energy shock is reversing. A new reaction function is itself event risk. The market does not yet know the chair's inflation tolerance. Watch one thing, whether he acknowledges the oil reversal, a dovish tell on the trajectory, or anchors to the inflation print and keeps the box shut. The dot plot and the new projections are the signal, not the held rate. And here is the carry risk. Tokyo's hike is the underpriced offset to the melt-up. The Bank of Japan is about 97% priced to raise its policy rate to 1%, from 0.75% on June 15th and 16th, the highest since 1995, on firmer growth and energy-driven inflation. A higher Japanese policy rate compresses the carry trade, the cheap funding leg under a large share of global risk. The unwind of August 2024 is the cautionary template. It lands the same week as the Federal Reserve into a tape that just closed at records. And carry unwinds have repeatedly hit Bitcoin and high beta risk first. This is the week's most under-discussed risk. Then the havens and the structural bid reasserts. Gold firmed near $4,190, rising even as oil fell and risk rallied. That is the tell. With the war premium fading, the bid that's left is structural reserve diversification and dollar debasement demand, not the tactical war premium. We cite gold by level and driver, never a contested period return. Bitcoin held near 63,600. On its 200-week moving average, the line that has marked past cycle bottoms, trading as a high beta liquidity proxy, not a haven. The constructive base, it is holding the cycle line, stablecoin minting points to dry powder, and the crypto market structure bill is targeted for passage by July 4th. The specific near-term headwind is the Bank of Japan hike. Put it together, the relief rally closed at records, but the durable news was structural. The state showed a kill switch on frontier artificial intelligence, gold's bid turned out to be structural not tactical, and the cycle line in Bitcoin held into a central bank week. The artificial intelligence trade now has two axes: physical, the power the build must buy, and sovereign, the artificial intelligence the state needs on. The relief needs a signature and a soft Federal Reserve. The model layer can be switched off. What can't? Optionality, less duration, less leverage, plus the artificial intelligence the state needs on, and the power the build must buy regardless of who signs what. Part 2, in focus, the artificial intelligence the state needs on. The data, then the debate. The lead is Palantir, ticker PLTR, the artificial intelligence the state needs on. Our workup pulled its numbers live from its regulatory filings. First quarter revenue grew 85% to $1.63 billion, an acceleration. United States revenue rose 104%, split between government, up 84%, and commercial, up 133%. Reported net income was $870 million. Cash rose to $2.3 billion, and against $8.5 billion of equity, total liabilities are just $1.5 billion, a debt-free fortress. The bull case, a profitable, debt-free, accelerating franchise wired into exactly the part of the stack the state is hardening around, and the export control regime that just froze a rival is structurally a tailwind for a government-embedded vendor. The rare artificial intelligence thesis that strengthens when the state intervenes. The bear case is the whole story on valuation, even after derating from a high near $207 to around $128, it trades near 40 times forward sales. The structural case is high confidence. The entry is the hard part. Don't chase it on a melt-up. The asymmetry improves on a derating. Own the thesis, respect the multiple. In crypto, the read is a cycle line hold into a central bank week. Bitcoin held near 63,600 on its 200-week moving average, the level that has historically marked cycle bottoms. The constructive base, stablecoin minting as dry powder, the market structure build targeted for July 4th, and institutional accumulation. The specific near-term headwind is the Bank of Japan hike. A hold at the cycle line is a base, not a confirmed trend change, and it must clear a central bank week with a carry headwind on top. The durable signal is the regime shift in how the asset class is analyzed. 2026 is a real revenue market, not a narrative market. And the plumbing keeps scaling. Newly listed SpaceX stock is already trading on-chain as a tokenized asset on major exchanges. And the thematic read, the artificial intelligence trade gains a sovereign axis. Two durable axes now, not one. Sovereign, government-aligned, security-cleared, embedded artificial intelligence, the state cannot switch off and may actively need Palantir. And physical, the power the build must buy contracted nuclear and independent power producers, low-cost gas, and the metal the grid is gated on. Be wary of the other side. Single-vendor dependence on a frontier model is now a governance risk, not just a competitive one. Model continuity is a policy variable. Model diversification and open-weight fallbacks are the hedge. The cleanest durable asymmetry is exposure the state cannot switch off and may actively need. Part 3, the kill switch signal. The relief is real, but the deal is still unsigned. Trade the regime, hedge the gap. The new variable is sovereign risk inside the artificial intelligence stack. The state switched off 2 frontier models worldwide 3 days after launch. The central bank week is still the offset. The Bank of Japan's hike to 1%, the same week as the Federal Reserve. And own the artificial intelligence the state can't switch off. Palantir, accelerating, profitable, debt-free, the rare name that benefits from state intervention. Where the edge stays, optionality plus the 2 durable axes. What we are watching the next 10 days. The Bank of Japan, June 15th and 16th, a hike to 1%. The Federal Reserve, June 16th and 17th, does the dot plot acknowledge the oil reversal, whether Fable 5 and Mythos 5 access is restored, and whether the export control regime widens to other labs. The Iran deal, an actual signature versus a collapse. SpaceX's aftermarket index inclusion flows against the December lockup. A copper review at month-end. And whether Bitcoin holds its 200-week moving average into the central bank week. And we keep score in public. Palantir, the lead sovereign artificial intelligence name, the one the state needs on, accelerating and debt-free but priced for perfection. Talen Energy, the lead power layer name, the power the build must buy. EQT, the same theme, lower leverage. Freeport-McMoRan, the copper bottleneck bellwether. SpaceX, the window is open but don't chase. Gold, the structural bid reasserts. Bitcoin, a macro liquidity tape on the cycle line. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. The relief is real, but the deal is still unsigned. Risk closed at records and oil fell to its lowest since March. But the vice president flagged fake information on the terms, and nothing is signed. The new variable is sovereign risk inside the artificial intelligence stack. The government switched off Fable 5 and Mythos 5 worldwide 3 days after launch, and the Bank of Japan's hike is the underpriced offset. And own the artificial intelligence the state can't switch off. Palantir, accelerating, profitable, debt-free, the rare name that benefits from state intervention. The edge is optionality plus the buyer. That's the kill switch. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. The state showed its kill switch. The build did not pause. We'll see you in the next issue.